Hi traders, in the previous video we talked about the reverse entry confirmation, and in this video we'll be looking at the continuation entry confirmation. The amazing thing about this strategy is that it helps you to get rid of FOMO, the fear of missing out, because you can actually wait and take another trade, wait for another opportunity to come with this strategy. Alright, so let's dive into the video as I basically show you how to catch this setup. So these are the checklists you need to follow to get this setup. And number one, confirm the trend of the market with break of structure. Now there are two trends here, the bullish and bearish trend, and this is a bullish trend. You can see this is a bullish trend, market is going up, and this is a bearish trend here. There's a bearish trend, the market is coming down, it's bearish, right? Is bearish. Okay, so you confirm it with a break of structure. And this is this market created a low, a higher high, higher low, higher high. Now the previous low, the previous high rather was taken. The previous high was taken and it created a break of structure here. This is a break of structure, BOS. This is the break of structure to the upside, and this is also a break of structure to the upside here. There is also a break of structure because the market is trending up, so it will keep taking out the higher high because an uptrend. It keep taking out the higher high. You know, I did a video, you can check on the channel, my YouTube channel. I did a video on market structure. I explained change of character, break of structure, the BOS, and other things. You can go there to watch that video to get proper understanding. Alright, so number two, the next thing on the checklist you want to check, you want to watch out for is wait for a retracement to FVG, that's the fair value gap or order block. Now after the break of structure, you want to wait for a retracement. So you want price to, you're not rushing this setup, you're not rushing the setup. It's a setup of patience. You just need to wait. I told you that the amazing thing about this setup is that it helps you get rid of the fear of missing out. Okay, so now number two, you wait for a retracement to the fair value gap or order block. So this can be your order block, and this will be your fair value gap. So one price get to any of these points. Then number three, you scale to a lower time frame for entry at your point of interest, your point of interest with change of character. That's your chalk, change of character. So now where is your point of interest? Your point of interest is that fair value gap or order block we marked. So this is your point of interest. This is where we want to take the trade. But we won't just enter like that. We have to wait, go down to the lower time frame. So this indicates your lower time frame. This indicates your lower time frame. On a lower time frame, we will want to see a change of character here. A change of character. This is a change of character here, and we wait for a retracement, then we'll enter. Or we can just set a pending order. We can just set a pending order here. We can set a pending order here immediately above the previous high. We set a pending order and put our stop loss here. We'll just target the next high. So it's simple, because sometimes if you don't wait for that change of character at your point of interest, the market may just come here. If you take trade directly from this fair value gap, the market may come here and just take you out before going back to that direction. It might just take you out. But we want to wait for the point of interest, which is our fair value gap or order block. We don't rush. Then we wait for a change of character on a lower time frame. Wait for a change of character. On a lower time frame is where we will see the change of character. Then we can see a retracement, or we just set a pending order. Immediately the change of character occur, we take the trade. So the same thing goes for the bearish trend. You want to mark your break of structure. your breakout structure. So you wait for price to retrace to the fair value gap or other block, which I said it is, which is our point of interest. The fair value gap where the price is going to retrace to is our point of interest. Is our point of interest. Then lastly, you scale down to a lower time frame and wait for a change of character. You wait for a change of character to occur. Wait for a change of character. Then you can actually use a pending order here, or you wait for a retracement. So the change of character actually indicates that the market is going your direction. It's gone. The market wants to continue the trend. The market wants to continue the trend. That's what the change of character indicates. That the market, that it's done retracing back. The retracement is done. Now it created a change of character, going to the initial direction. Going to the initial direction, which is a downtrend here, and for an uptrend, which is an uptrend here, going up. For a downtrend, a bearish market coming down. So that's pretty basic. Now let's go to the chart so I can explain everything better. So I caught these two trades on AUD USD using this setup, the continuation entry confirmation. So number one on the checklist, what I did, I spotted the trend of the market. I saw that the market was actually bearish. You can see the market was bearish on the this is a 4-hour time frame. The market was bearish on the 4-hour time frame. Now number two, I waited for a retracement. I waited for a retracement to a fair value gap. I was actually expecting price to retrace to this fair value gap here, but price didn't come down. There's a fair value gap here, but price didn't retrace to this point. So I waited and waited. The market was ranging here. This is actually like a range. This is a range on the 4-hour time frame. I saw a high, a low, and a fair value gap. This is a fair value gap I saw here. This is a fair value gap. This is a fair value gap here. So I waited for price to retrace back to this fair value gap for me to enter. Price didn't get to this fair value gap, so I waited. I didn't take this trade here because it didn't get to the fair value gap. Now price came down, retraced back to that fair value gap. This was where I entered, but I didn't just enter. Then the third one, I scaled down to a lower time frame. So on the 1-hour time frame, I actually entered on the 15-minute time frame because the 1-hour time frame didn't really give me. Let me delete this. The 1-hour time frame didn't give me confirmation. It didn't give me an entry yet. I saw this, it didn't give me an entry. So I went to the 15-minute time frame. So on the 15-minute time frame, this is what I saw on the 15-minute time frame. So already this is the fair value gap I marked there was my point of interest. This is my point of interest, the fair value gap I saw. So I was expecting price on that point of interest to create a change of character. On the lower time frame. So immediately it created a change of character. I set a pending order here. This is why I set my pending order here. I didn't wait for a retracement because why? Because this change of character happened around the point of interest. This is my point of interest. So I didn't wait. This is my POI, the point of interest. The fair value gap is my POI. So immediately I saw this break off. Immediately I saw this change of character. Here. I initially marked the fair value gap and I set my pending order here. So like, okay, if it trade back to this fair value gap, it will still drop, and my stop loss was just here. But because I was expecting this trade to go well, then I just set pending order here, and the market played out. Itself. My target was the next. This is why I targeted. This is my target. So price hit TP. Then I waited for a retracement. Now if we go to the 4-hour time frame again, how I caught the second trade. Now on the 4-hour time frame again, we can see that the market is also trending down. It's a bearish trend. Okay, so it's a bearish trend. Now I waited for price. There's a fair value gap here. Right? Let me delete this one. So there's a fair value gap here. There's another one here. There's a small one here. There's a small one here. Okay. And then there is another one here again. Let me delete this one. There is another one here. So on this move now, this market move, there are 3 fair value gaps. So how do you know the fair value gap they want to take? There's something I still taught called the PD array. So you get your Fibonacci, 2, you drag, right? Let me move this, let me clear this. So you drag, you put your Fibonacci. Now the 50% here, this is the 50% is our equilibrium. Down here is a discount and above is a premium. So why above is a premium? So I was waiting for price to get past this 50%, which is the equilibrium. Either it gets from this point, I'll look for a way to sell, look for a sell opportunity, or if it goes up, I also look for a sell opportunity from this premium zone. Above the 50% is the premium zone, below the 50% is the discount, and the center is the equilibrium. So I waited for price to get here, to get above it. So when price got above the 50%, I scaled down to the lower time frame. On a lower time frame, I just you can see I marked this fair value gap already. This fair value gap, it's already around the 50%. It's already around the 50%. So price can likely drop from here, or it can go up, or it may even go to this first one, this one above, whichever one. But what we need to do, I waited for the last thing on the checklist, which is to scale down to a lower time frame. For entry at point of interest with chalk, with a change of character. So this was what I saw here. So on this 15 minutes, I saw the change of character here. Then I didn't actually wait for a retracement. I just took the moment I saw the change of character, I took my trade here. I took my trade from here, and my stop loss is just above. And I targeted the next liquidity. Pool. Targeted this place. So the trade played out nicely. So these are the 3 things on this checklist you need to check, and you always catch this setup. You always get this setup. If you miss an opportunity, don't rush, don't chase trades. Just wait for your checklist to play out everything correctly, then you enter. Don't chase trades. This continuation entry will help you to get rid of the fear of missing out. So thank you so much for watching. If you found this video helpful, kindly like and subscribe for more amazing content like this. Bye.